Well, hello folks out there in YouTube land. Got a big show lined up for you. Let's get right on into it. All right. These are some stocks that I've been buying. I really like these. It's actually 6 stocks I'll be covering today, and I'll be summarizing them and going over the highlights of them, talking about the charts a little bit. First, I will talk about the market for a moment. As you know, we're heading into a recession. I think that's pretty clear. The inflation's too high, gas prices are too high, and those are intertwined. You know, one kind of creates the other. And I don't see a whole lot getting done about that. So really, the Fed, it doesn't have a choice. It's got to go up on interest rates and continue up until it pushes us into a recession. That will kill demand. Understand, high prices and then high interest rates, that's going to really knock down demand, and that will force these prices down. That's really the only way that we're going to be able to do it, because the drilling's not going to happen. You know, we've got a lot of oil in this country, but we're not going to drill it. So it is what it is, and we'll just have to deal with it. But at some point, we're going to come out of this. We'll come out of the recession, and we'll come out of this high inflation. In the meantime, there are a lot of good bargains out there, and I'm going to start out with Facebook or Meta. And as you can see, Meta's down today. They settled a lawsuit for like $100 grand, but they are going to have to adjust some of their algorithm on their advertising, so that hurt a little bit. But its PE ratios, it's gotten under 12, which is amazing. But this stock is a value stock at this point. Of course, it's a FANG stock, and it's sitting pretty down here as far as a buy for me. I actually just bought it 10 minutes ago. And the other reason that I bought it, and I'm going to draw this in, as you can see, it fell down to this support. I really didn't think it would get down here because that's under 160, but it has gone below 160 down onto this support level, and I'm comfortable right here. A PE ratio of under 12 for a company that is very profitable. Net income last quarter of $7.4 billion on $28 billion in revenue. The quarter before $10 billion, September $9 billion. 10 billion, et cetera. So this company's super profitable and a great margin. You know, margins around 30% are pretty much hanging around in that area. So that's super strong. A balance sheet a lot of countries like to have. So, you know, this company's not going anywhere for a very long time. 1.9 billion users. And I'm a big believer in the metaverse. I think that's going to probably be the next big tech explosion, if you will. Now, maybe it won't be. I could be wrong. But the company in and of itself is extremely valuable and very profitable. So, you know, at under 12 is just, I'm going to buy that. So that's Meta today. The next stock is MP Materials. This is an EV play for me. It's a picks and shovel play. And this is the only mine in North America that's mining those 14 rare earth elements that you need for magnets and batteries and all that. So I consider it an EV play, even though it can be used in all kinds of batteries. This company is super profitable. You look at it, the revenue was up 177% year over year. Net income was up 430% because obviously those rare earth elements are very valuable. And they're actually adding a phase 2 to MP Materials where they'll be processing those materials themselves instead of sending them off. So that'll be another profit center for this company. But net profit margin has gone up significantly. It's at 51 freaking percent. I mean, that's just awesome. This company's a growth beast, as you can see. The only issue that's a negative, and it's understandable that it's a negative, its trailing PE is 31. But the forward PE on this thing turns it into a value stock. So that's probably holding some people off, plus the market being in the crapper. But I'm very comfortable with MP. I think this is going to be a $70 stock, probably within 12 to 24 months. So I'm buying it. I actually bought it today. The next stock on the list is NIO. Of course, that's an EV play in China. This is the premium. This is in the premium section of EVs. And they've just introduced the ES7. They're getting ready to have the ET5 come out in September with their second plant. This stock has got analysts all fired up. One's calling for 31, one's calling for 45. We had one that even called for 87, and he's actually backed that down, which is probably a good idea. But this company is really on the move. Now, it's got a couple of issues that are special to China, and that's number one, the stupid lockdowns, which make no sense. And that has held back its deliveries and its production. And then on top of that, you do have the delisting fears. Now, China has been saying all the right things about that, about getting with the SEC and allowing the auditing to happen. But the SEC's made it clear until we actually start auditing, you're still going to be, we're still looking at you real hard. And now, granted, it takes a really long time to delist a company, around 3 years, but there are those two risks that you got to take into account. But this stock has been on the move. As you can see, over the last month, it had dropped all the way down to 12. It's up to 22.50 now, so it's up quite a bit and starting to make a nice move, especially with all those analysts calling for a higher price target. And it looks like they're on pace to get their deliveries or production up to around 25 to 30,000 a month. Right now, they're under 10 because of the lockdowns, and they have not opened up the second factory completely yet. They're just getting it started. So this is a company that I like. I was buying it a lot at 16, and I'm looking to add only on big pullbacks because I've got a pretty good position on it. But this company should be worth quite a bit of money in a year or two. I would put it, over 40, probably within 12 to 18 months is sort of my guess on a target price for it. But like I said, it needs to have some things happen for it. The lockdowns need to stop at some point. You can't shut down your whole country over the Rona, over the newest version. It doesn't make any sense. And no other country's doing that either. But I do like it long term. Now you got Palantir. Now this is a very interesting stock. It's got positive cash flow, significant positive cash flow. It is not GAAP profitable because they've got stock-based compensation where the top dogs are taking too much money off the top. And that happens with companies. It sucks. And it doesn't affect the cash flow or the long-term viability of the company, but it does dilute the company, and it just pisses me off. And that's a pretty big negative. Anyway. But Palantir is an information specialist company, software as a service, very profitable, in the 70 to 80% profit margin. And I think as they get this stock-based compensation worked out over time, and they have addressed it, and it is coming down, I think this company will continue to move up. I think it's at a great price. The other day it was under 8, and I was gobbling it up. Even at 9, it's not bad at all. Not bad at all. But it's growing at over 30% a year, and it looks like they're calling for it to continue to grow at that level for the next, through 2025 at least. And it's a very important company because it basically allows companies and countries to use the information that they have to become more efficient or more productive in whatever it is they do. Like an oil company, for example, they help them produce more barrels of oil, for example, from a rig. And they've really got a bit of a moat because of that, because they're so many years ahead on any other company trying to compete with them. So I love Palantir long term, but that's me. It is a risky stock because it's not GAAP profitable, but I really like it. Now this next couple of stocks are penny stocks, okay? So take that into consideration, that whenever you buy a penny stock, there's extra risk. I'll bring in my assistant for that.
Danger, Will Robinson. Danger. No, Will Robinson. Danger.
That's right. Danger, Will Robinson. Always remember that with penny stocks. This one is Ilus International, and they are a fire and safety sector company. They're an umbrella company that's mergers and acquisitions. They've got about 8 companies under their umbrella at this point, and they continue to acquire more companies. Now realize with both the penny stocks I'm covering, they're both profitable companies, which is pretty rare in penny stock land. Let me assure you, I cover quite a few penny stocks, and it's really rare to have one that's profitable like this. And both of these are. So Ilus continues to grow. They're looking at picking up a $20 million revenue company and a $100 million company. And it's really been a very fascinating company to cover. And it has been pulled down some. As you can see, it had started at 5 cents, ran up to over 40, and now it's sitting at 8. So I like this buy. I picked it up the other day, picked up some extra in this 7 area, but now it's sitting at 8.5, and that's not a bad buy at all for it. I think if this company continues to grow and they keep their profit margin, this company could actually wind up becoming sort of a value stock over the next 12 to 18 months if they continue down the path they're under. But like I said, this is risky. You're either going to make quite a bit of money or you could, lose a big chunk. So that's the way it always is with penny stocks, so understand that. And the last one is CYBL. It's called Cybl. This company is well known for their LED lighting that they sell to the military, and they sell to multiple branches of the military for this. They also are getting into software as a service, and they've increased their revenue significantly. On about $6 million in revenue last quarter, they had about a $1.2 million profit, so their margin's very good. This company has a chance to really do something special, sitting at 1.3 cents. They've also are planning a $19.5 million repurchase of stock over the next 3 years, is my understanding. And they have the cash flow to do that if they continue down the path they're on. And realize it's only a $66 million market cap company. So, this is one that long-term could work out real nicely. There is one big problem with it right now. It's got a yield sign on it. And yield in a penny stock, OTC stock, means not enough current information. They just filed an amended quarterly report with an attorney letter stating that it is current and that the quarterly report, in his opinion, should satisfy the OTC markets. OTC's got to agree to that. Once that yield sign's out of the way, as long as they agree that it needs to be removed, should help this stock quite a bit. But I've been doing a lot of due diligence on really all these stocks, and this one recently, and I did just buy it yesterday, as a matter of fact. All right, folks, and that's the 6 stocks that I'm buying right now. I had to go over them pretty quickly so this didn't turn into some crazy long video. But I've done a lot of due diligence. I've got a lot of videos on these companies. If you want to dig a little deeper or watch some videos that I've done that get into these companies specifically, you're more than welcome to, and I'll attach some of them at the end. You can check those out if you like. And if you like this content, be sure to hit that like button. It lets me know to continue to cover these companies. And if you haven't subscribed, hit that subscribe button. I'd certainly appreciate it. And I hope you did like the content. We'll see you next time on Mr. Frugal Investor.